Assalamualaikum. Our group, which is Group 4, will present about financial scandal of private bank. Before that, I will define what is accounting and auditing. Accounting can be defined as a process of reporting, recording, interpreting, and summarizing economic data. Financial statement will be prepared in accordance with accounting framework, such as generally accepted accounting principle and international financial reporting standard. While auditing is a systematic process, it is a logical and scientific procedure to examine the accounts of an organization for their accuracy. There are rules and procedures to follow. The audit is always done by an independent authority or a body of person with the necessary qualifications. Every listed company must be audited by hiring an external auditor to ensure that the financial statement present a true and fair view without any fraud or error. Auditors will report their opinion through the annual report. My group member will explain about chronology of the scandal, how it affected the auditor, and the role of the auditor in the cases.
Private Bank is the largest bank in Ukraine and dominates the retail banking sector. It was established on March 19, 1992. 2016 saw the nationalization of Private Bank. It used to be the biggest commercial bank in the country, but after being declared bankrupt, the government took control of it. Customers can use the majority of service remotely through Private24 thanks to modern digital banking and distinctive technological solutions developed in Ukraine. Around 18 million Ukrainians usually use Private Bank, while 20.5 million people now use Private24, a digital bank. Ihor Kolomoisky and Gennady Boholyubov were named in a complaint filed by Private Bank in Delaware State Court on May 21, 2019, accusing them of allegedly lending money to companies they control before using Delaware companies to launder the funds before purchasing assets in the country, such as real estate and metals business. The lawsuit alleges that Kolomoisky and Bogolyubov both used Private Bank to increase their personal savings and eventually stole billions of dollars from the company. They are also accused of using United States entities to launder hundreds of millions of dollars in loan proceeds from Private Bank that were transferred to the country to enrich themselves and their associates. Volodymyr Zelensky, the president of Ukraine, under pressure to find a solution to the long-running conflict between the country's bank and its previous oligarchic owners. While backing the nationalization, the International Monetary Fund (IMF) gave Ukraine a $17.5 billion rescue package in 2015 and stressed earlier this year that it was important for the government to continue its attempts to seek reparations from the failed bank's former owners and related parties. If the nationalization of Private Bank is cancelled, the IMF has stated they will stop providing aid. United States has filed a civil forfeiture complaint in the Southern District Court of Florida, alleging that more than $6 million in sales proceeds of commercial real estate in Dallas, Texas, and maintained using the proceeds of fraudulent transactions and embezzlement from Private Bank in Ukraine. In August 2020, the United States filed 2 lawsuits in the Southern District of Florida, alleging that money stolen fraudulently from Private Bank was used to buy commercial properties in Dallas and Louisville, Kentucky as part of multi-billion-dollar loan scheme. In December 2020, it filed a third lawsuit in the same jurisdiction, alleging that the Cleveland, Ohio property was also involved. Mordechai and Uri Leber, who were associates of Kolomoisky and collaborators of Boholyubov out of the Miami office, set up a network of organizations to continue to launder the stolen money. Usually, this organization uses the name Optima. The Commercial Towers, Timmons Towers in Dallas, which is the focus of this action, along with the office tower known as 55 Public Square in Cleveland, PNC Plaza in Louisville, and Dallas office park known as the former Compucom headquarters, are between properties and companies they buy for hundreds of millions of dollars across the country. The latest action alleges that several Optima entities, including Optima Ventures LLC, Optima 7171 LLC, and Optima Statements LLC, used profits from the Compucom campus, which was initially purchased using funds stolen from PrivatBank.
Next, I will present about legal liability on auditor that can affect auditors to be sued. After the auditor sign the agreement with client, they will face 4 types of liability, which is liability to clients under common law, liability to third party, criminal liability, and civil liability. Some of the causes of legal action against auditors under the common law such as: first, breach of contract like failing to discover a material error or employee fraud and withdrawing from an audit engagement without justification. Second, negligence is failure to exercise a reasonable level of care that causes damage to another. Third, gross negligence is failure to exercise even a minimal level of care but without intent to harm or damage anyone. Lastly, fraud is intentional concealment or misrepresentation of material facts that cause damage to those deceived. 4 conditions must be met by the plaintiff in order for the auditor to be held liable for negligence. For the first, the plaintiff must prove that the auditor owes a duty of care to the plaintiff. Second, the auditor's breach of that duty. Third, the plaintiff must prove that their damage are the result of the auditor's negligence. And lastly, the plaintiff must prove that they suffer loss or damage due to the auditor's opinion. In this case, PricewaterhouseCoopers was the auditor for PrivatBank Ukraine from 2013 until 2015. On April 18, 2018, PrivatBank sued PwC for $3 billion because of the extensive breaches of duty of care during their auditing service that causes damage and losses of $5.5 billion during 2016. PrivatBank, as a plaintiff, must prove that the auditor's negligence had a causal relationship with the damage because it relied on the financial statements. PrivatBank claimed that PwC did not detect the material misstatement and fraud until PrivatBank had a major capital deficit in 2016. If the audit firm is sued by a client, the case will be drawn out and the audit firm will have a negative public image.
Assalamualaikum dan salam sejahtera. My name is Ashraff bin Saidan, metric number 277477. I will present about ways for auditors to defend against client suits. First of all, the PwC can defend their audit firm by proving a non-negligence performance by auditors. The PwC can claim that the work was completed in accordance with generally accepted auditing standard. The auditors did not provide any absolute assurance but instead provide reasonable assurance based on audit evidence gathered. The PwC acted in a good faith, exercised due diligence, and was unaware of any misstatement because documentation supported their audit opinions. The PwC believed that there was no basis for PrivatBank 3 billion lawsuits. The auditors can provide documentation of their audit work as evidence to back up their opinion in the event of clients' lawsuits. Moving on to my next point. The PwC can defend lawsuits against PrivatBank by claiming contributory negligence. The auditor believes that clients are responsible for the loss of the company due to an ineffective internal control systems. The auditors can't detect any material misstatement because auditors are unaware of the ineffectiveness internal control system that has been practiced by clients. The ineffective control system shows that clients are partially responsible for the loss of bankruptcy that happened in the company. For example, the PwC disclosed that they are unaware of the comprehensive restructuring plan by National Bank of Ukraine that have been agreed by PrivatBank.
According to a Guide to Understanding Auditing and Assurance, mentioned listed companies 2021, auditing is commonly misunderstood as an activity that detects errors in an object. According to popular belief, the primary objective of auditing is to provide a judgment on the veracity and fairness of financial accounts. Thus, auditors are indirectly dealing with mistakes and scams. According to auditing and assurance standards, fraud is defined as a deliberate act done by one or more members of management, particularly those those charged with governors, workers or third parties in order to acquire an unfair or unlawful advantage through deception. Other than, according to ISA 240, in the case that requires auditor to respond towards identified fraud or suspect fraud, they need to identify, assess and obtain sufficient appropriate audit evidence regarding the assessed risk of material misstatement due to fraud and respond appropriately as being discussed in the International Standard on Auditing 240, the auditor's responsibility relating to fraud in an audit of financial statements.
Assalamualaikum and hi, my name is Nurul Nabilah, binti Mohamad Isa. My metro number is 280905. So for my part, I will explain my first point in involvement or role of auditor in this case, which is professional skepticism. According to the international standard on auditing 200 objective and general principles governing an audit financial statement, auditor must maintain professional skepticism while exercising the audit regardless of their experiences with their entity honesty and integrity. Professional skepticism is defined as a questioning mind, being alert to situations that are likely to indicate deviation or misrepresentation owing to the mistake or fraud, and conducting a critical review of the evidence. Because of the features of the fraud, this attitude is critical and should be conveyed by every auditor so that they are aware of the likelihood of major misstatement due to the fraud in the entity's financial statement. In addition, given this concept, it is clear that professional skepticism is difficult to quantify. It is also not something that can be developed overnight because it is a skill that develops through time and that auditors should always work to improve. However, auditor may accept any records or document linked to the entity's financial statement provided they have a strong belief that those records and documents are authentic after thoroughly and critically analyzing them, unless the linked paper or document cannot be identified as legitimate or have been altered but were not reported to the auditor. Additional inquiry should be conducted. In such cases, auditor must pursue every conceivable method, such as obtaining confirmation from a third party or assessing the document validity using the expertise of an expert. Furthermore, auditors are obligated to examine if there are contradictions in management or those entrusted with governance response to inquiries. According to the Losy PrivatBank, one of the biggest banks in the Ukraine, which is owned by Ihor Kolomoisky and Gennady Boholibo, cheated the clients of billions of euros through theft and fraud. The two are accused of obtaining illegal loan and credit line between about 2008 and 2019 when the scam was found and the bank was taken over by the National Bank of Ukraine. According to the complaints, they are allegedly used a number of bank accounts connected to the shell company, mostly at the PrivatBank's branch in the Cyprus, to launder part of the illicit earning before sending the fund to the United States. For the conclusion, the crimes that occurred at PrivatBank Ukraine demonstrated how important it is for an auditor to have the professional skepticism trait. It also required keeping an eye out of audit evidence and contradicts other audit evidence or bring the reliability of information gathered from management and those in charge of governance into doubt. This thorough examination is essential for the auditor to make appropriate conclusion. If the auditor lacks of these qualities, the likelihood of fraud, theft and criminality will be increases.
The next audit rule is auditors must assess the effectiveness of entity risk management. According to 1 SA 315, auditors are required to evaluate the effectiveness of the risk management of a company. An auditor must avoid forming an unqualified audit report on a misstatement financial statement. In order to find those misstatements, auditors must dig deep into the audit evidence provided by the company, such as investigating more explanation on transactions that look irregular or uncommon. And the next point is the procedure on assessing risk of material misstatement is called risk assessment. When selecting an audit product, auditor must consider the elements that are unpredictable due to the audit procedure. Auditors are able to know the risk of fraud in the company. Auditor must include the element of uncertainty detected by PrivatBank from year to year. As a method of recording uncertainty, auditor would perform audit procedure on PrivatBank that convert the account of PrivatBank, disclosure of PrivatBank, and accession that had not been tested through risk assessment before. Detecting the material misstatement caused by fraud or errors can be done by audit procedure carried by auditors with proper care and skillfulness. To assess the risk of material misstatement that are caused by fraud, auditors should include the element that cannot be predicted in the audit procedure. The management of PrivatBank should make inquiries to their auditors about the internal risk assessment on material misstatement. So auditors need to conduct more evaluation on management and internal auditors of PrivatBank. Auditors also need to assess PrivatBank application of accounting principles that are related to subjective measurement and complete transaction that can lead to misrepresentation.
Hi, Assalamualaikum and good morning everyone. My name is Aina Syazwani binti Mohamad Saini. My metric number is 280735 and I will continue the presentation, which my point is discussion among the engagement team. International Standards of Auditing (ISA) requires that the engagement partners and other key engagement team members discuss among them to prevent and detect any fraud to occur. ISA 240 paragraph A12 presents a list of issues that are ordinarily discussed among the engagement team, including on how and where they believe fraud may cause the entity's financial statements to be materially overstated, how management may commit and cover up fraudulent financial reporting, and how entity assets might be taken illegally. They also should do an analysis of situation that could be evidence of earnings manipulation and management practices that might be used to control profits in a way that could result in fraudulent financial reporting. They could also consider some potential that management might attempt to portray disclosures in a way that could make it challenging to truly understand the things revealed, such as by presenting an excessive amount of irrelevant information or by using confusing or unclear language. Other than that, a consideration of the non-external and internal factors impacting the entity that might lead to fraud present opportunities for fraud to occur and indicate a culture or environment that would encourage or force management or other individuals to commit fraud should be discussed. According to ISA 315, the engagement team must discuss how susceptible the entity's financial statements are to material misstatement both at accession and financial statement levels. The discussion's goals is to enhance understanding of potential fraud or errors and how they could be committed. Furthermore, it also allows the audit teams who is highly experienced to contribute their insights for the other team members to share information. Referring to the PrivatBank case, it is an opportunity to perform fraud due to PrivatBank have tons of transactions conducted rapidly by the bank and auditors lacks experience. Thus, the discussion among the engagement team is a must procedure to ensure fraud can be detected earlier. The engagement team's discussion about the entity's financial statements susceptibility to material misstatement raises some particular consultation issues because it allows team members to share knowledge about business risks and how and where the financial statements might be subject to misstatement due to fraud or error. In addition, during the audit, members of the engagement team will learn new information that might affect how the risks of material misstatement are evaluated. It is crucial that they share this data to the rest of the team. Professional judgment and professional skepticism are two essential elements during the discussions. This is aimed to prevent pointless discussions and ensure that the discussion's prime objective is always the center of attention. The focus of team discussions should be professional skepticism, which involves being alert for information that could lead to a material misstatement and truly investigating such evidence. Thus, the engagement team of PrivatBank should emphasize the importance of professional judgment and professional skepticism in discussion. In conclusion, PrivatBank has been declared bankrupt because of the irresponsible lending policy case. This may be due to negligence on the part of the auditor who failed to detect fraud. However, the auditors have several ways to defend themselves from blame, such as defending the reputation of their audit firm from negligence. They also can defend the legal action by accusing the company PrivatBank as contributory negligence. Therefore, an auditor needs to be aware of all anomalies in all company documents to avoid cases of fraud among company employees. Negligence on the part of the auditors not only harm the company but also harms the auditors themselves, because of their reputation as auditors will be affected when there are companies under their supervision experiencing serious financial problems. So that's all from us. Thank you.